Hello and welcome to the World Battery Metals and Mining News for the 30th of July, 2024. Rio Tinto half-year profit meets estimates, expects good demand in China. Rio Tinto reported half-year underlying earnings of $5.8 billion, matching market estimates, driven by gains in its copper and aluminum businesses despite a 15% drop in iron ore prices. The company declared an interim dividend of $1.77 per share, slightly below expectations. CEO Jakob Stausholm remains optimistic about commodity demand, particularly from China and the U.S. The firm is expanding its copper production with plans for a 3% compound annual growth rate from 2024 to 2028. Additionally, Rio Tinto welcomed the reinstatement of its license to develop the significant Jadar lithium project in Serbia. Net debt stood at $5.1 billion, with free cash flow at $2.8 billion, and increased capital investment is expected for the Simandou iron ore mine in Guinea in the second half of the year. Cyprium, Glencore partner up to restart Nifty copper mine in Australia. Australia's Cyprium Metals has entered a strategic partnership with Glencore to restart its Nifty copper complex near Port Hedland. Announced on July 26th, the deal involves Glencore purchasing 100% of the copper products at market prices, including off-spec materials, from Nifty's processing plants, with an agreement extending to 2026. Glencore is also committing to a $20 million prepayment to accelerate the construction of a new surface mine and provide working capital, along with technical support and an option for Cyprium to purchase sulfuric acid. This agreement aims to ensure revenue stability and supply chain reliability for Cyprium, which acquired the Nifty project entirely in 2021. Since its inception in 1993, the Nifty mine has produced over 700,000 tons of copper and is currently estimated to have a resource of 125 million tons, averaging 0.83% copper. Bastion Minerals to acquire copper assets in Canada's Northern Territories. Australia-based Bastion Minerals is set to acquire 3 high-grade Canadian copper assets, including the Ice deposit in Yukon Territory and the Mariner and Harley projects in the Northwest Territories. The Ice deposit, a Cyprus-style VHMS deposit, boasts a historical resource of 4.56 million tons at 1.48% copper. Bastion plans to confirm historical work and set a timeline for drilling and exploration. The acquisition includes 260 claims near former Wolverine mine, with potential additional value from unaccounted gold, silver, and cobalt. The Harley and Mariner projects in the NWT offer further exploration potential. The deal involves $140,000 cash, 187.5 million BMO shares, along with options and performance shares, pending shareholder approval. Bastion also exercised an option to acquire 3 lithium properties in Ontario and hold stakes in projects in Chile, Sweden, and Australia. Eldorado Gold inks deal to earn 80% of TRU. Eldorado Gold has secured an option agreement with TRU Precious Metals to acquire an 80% stake in the Golden Rose gold-copper project in Newfoundland, Canada. The deal entails Eldorado making staged cash payments amounting to $8.25 million and investing $7 million in exploration. This collaboration is expected to accelerate the development of Golden Rose and help TRU manage its corporate expenses, with TRU retaining operational control. If the option is exercised, Eldorado and TRU will enter a joint venture agreement over TRU's mineral claims, with potential benefits for TRU concerning adjacent mining claims under a separate option with Quadro Resources. Additionally, Eldorado recently acquired the Louvum property in Quebec and partnered with Brixton Metals to advance the Atlin Goldfields project in British Columbia. Funds cut copper bets by $20 billion as bull trade unravels. Money managers have withdrawn over $20 billion from bullish copper positions since mid-May, driven by concerns over declining Chinese demand, precipitating a steep drop from the record high of $11,100 per ton to around $9,000. This sharp reversal in copper bets, originally spurred by confidence in long-term demand for data centers, renewables, and electric vehicles, is now testing the economic outlook. Despite the market being oversaturated in May, current prices, although depressed, may stabilize due to expected supply constraints and potential output cuts by smelters. While the demand remains weak, Analysts believe that unless broader economic conditions worsen, a massive liquidation of remaining long positions is unlikely. Copper recently traded at 8,930.50 cents a ton on the LME, its lowest since March. BHP, Lundin grabbed Filo in $3 billion South American copper deal. Mining giants BHP and Lundin Mining have agreed to a $3 billion deal to acquire Filo Corp, a move that will give them crucial copper assets in Chile and Argentina. The two companies are forming a 50-50 joint venture that will fully own the Filo del Sol project, located near the Atacama Desert, and the Josemaria project in Argentina. BHP will contribute a larger financial share due to Lundin's existing 100% ownership of Josemaria. This acquisition underscores the high-value mining firm's place on securing access to copper, a vital resource, despite the substantial investments and extended timelines required to make these assets operational. BHP and Lundin's bid includes a 32.2% premium on Filo shares based on recent trading averages, reflecting the strategic importance and scarcity of such large-scale copper projects. Australia's IGO flags job cuts as nickel price slumps. Australian nickel and lithium producer IGO will reduce its executive team as part of a strategic reshaping led by CEO Ivan Vella, focusing on improving lithium hydroxide production and managing nickel write-downs. Since acquiring Western Areas for $1.1 billion in 2022, IGO has faced significant write-offs due to declining nickel prices. The company plans to unveil detailed strategies during its annual results on August 29th. Key initiatives include optimizing performance at the Kwinana hydroxide plant with a major shutdown planned for improvements and increasing lithium raw material production by up to 150,000 tons in the next financial year. IGO aims to enhance value from its Greenbushes lithium mine and other businesses while transitioning some nickel operations to care and maintenance. New method recovers 50% lithium from batteries in 30 seconds. Researchers at Rice University have developed an innovative method to recover up to 50% of lithium from spent lithium-ion battery cathodes in just 30 seconds using microwave radiation and a biodegradable solvent. This efficient and eco-friendly approach contrasts with conventional recycling methods, which involve harsh acids or inefficient and costly eco-friendly alternatives like deep eutectic solvents, DES, typically recovering less than 5% of lithium. The team used a DES mixture of choline chloride and ethylene glycol, which effectively absorbs microwaves to quickly leach lithium from battery waste. This new technique significantly reduces the time needed for lithium recovery compared to traditional oil bath heating methods, aligning with the rapidly growing lithium-ion battery market, valued at over $65 billion in 2023. SRG Mining completes move to UAE, rebrand to Falcon Energy. Canadian graphite miner SRG Mining has redomiciled to the United Arab Emirates, UAE, and rebranded as Falcon Energy Materials to enhance its ability to secure foreign investments and expand strategic options. Trading under the new ticker symbol FLCN and headquartered in Abu Dhabi, Falcon Energy continues to develop the Lola graphite project in Guinea. The move aligns with UAE's favorable bilateral investment and double taxation treaties with Guinea. This change comes amid stricter Canadian policies on foreign investments in critical minerals, leading Falcon to cancel a previous investment deal with Chinese firm C1. The Lola mine holds significant graphite resources, with over half being large flake and 26% jumbo flake material. Analysts expect Glencore to keep coal assets after Teck purchase. Glencore is expected to retain its coal business as a significant revenue stream following its recent acquisition of Teck Resources' steelmaking coal assets. The company is currently gauging shareholder opinions on whether to keep the combined coal assets within Glencore or spin them off into a separate entity, with a decision to be announced on August 7th. Despite the global trend of major companies exiting the coal industry due to environmental concerns, Glencore remains committed to coal, planning to increase steelmaking coal production post-acquisition. Analysts believe a demerger is unlikely, as shareholders value the robust cash flow from coal operations for capital returns and buybacks. Glencore previously announced plans to phase out its thermal coal mines by the mid-2040s and close several by 2035. The company's share price recently dropped by 2.6%, and it reported a production decrease across various minerals while maintaining its 2024 copper production guidance.